Time now for The Real Estate Connection with Stephen Thayard, a realtor and certified probate and real estate specialist. Whether you're a first-time homebuyer or a seasoned investor looking to downsize, move up, or refinance, this program is for you.
Our house in the middle of our street. Our house that you've got to in the middle of our...
From probate sales to landscape design to home repairs and maintenance, this is your weekly look into all things real estate. Now your host for The Real Estate Connection, Stephen Thayard.
Welcome to The Real Estate Connection with your radio realtor, Stephen Thayard. That's right. Thank you, folks, for joining me on today's show. I really do appreciate you spending time with me on Saturdays. Without you, there wouldn't be a program. All right, so we're going to jump right on in. You know, California is one of the most beautiful states in the Union. Some would argue it is the crown jewel of the nation. Beautiful coastlines, fertile farmland, and an abundance of natural resources, including gold and oil, not to mention the fruit of the vine called the grape in our fantastic wine industry. California has a lot to offer the nation, as well as it being, I think, the sixth largest economy in the world, and our goods and services that we produce, that goes out to serve not only the United States of America, but other countries. We are the land of technology, entertainment, and almost perfect weather. You know, I used to have this discussion in my family about the weather pattern in California, and I was told by a family member that the only other place on the planet that has a similar weather pattern to California is the south of France in Monte Carlo. So that's saying a lot. So our weather is absolutely fantastic. However, California is also known for the surprise danger of earthquakes. That's right. Shake, rattle, and roll, baby. Shake, rattle, and roll. Earthquakes happen suddenly and can cause massive amounts of damage to our homes that we live in. Have you ever wondered, given this fact, how earthquake insurance works? What's the cost? And is it worth having on your house? Well, stay tuned, because in today's show, we will be doing a review of earthquake insurance as it relates to residential real estate. Right? Earthquake insurance as it relates to residential real estate. Hey, if you're new to the program and you don't want to miss any future content, hey, send me an email right now at info@realestateconnectionradio.com. That's info@realestateconnectionradio.com with your name and your email address, and I'd be happy to add you to my podcast distribution list. And oh, by the way, if you're thinking of buying or selling residential real estate in the near future and you want to work with your radio realtor, Stephen Thayard, give me a phone call right now at 408-472-0817. Again, 408-472-0817. I want to thank one of the radio listeners who reached out to me recently for their condo up in San Bruno, and I'll be working with him to get that listed on the market for sale in the very near future. So I want to thank you for reaching out, and I look forward to getting the job done. All right, so do you remember where you were on October 17th, 1989 at 5:04 p.m. when the 6.9 Loma Prieta earthquake hit the San Francisco Bay Area? Well, I do. I think I was in college still, and I was coming home from school, and it felt like the whole back end of my Toyota Celica was starting to come out from underneath me, and the radio went dead. The World Series was on. It was crazy, crazy times. Remember all the traffic lights out, gas lines needing to be turned off, the partial collapse of the Bay Bridge, the collapse of the Cypress structure on the Nimitz Freeway? There was $162 million in damage and approximately 1,000 homes in the Bay Area were either damaged or needed a major repair. So, whether or not you have earthquake insurance could mean the difference between being able to rebuild in this scenario or not, or maybe having to abandon your property. The rub about this is thousands, and I mean thousands, maybe hundreds of thousands of structures had minimum to minor damage. So you were either one of those houses that just got wrecked, or you might have had a couple of cracks in your wall, or maybe you had a water line break, or just some personal property fell over and you didn't have any damage at all. And so that's the mystery. There's the rub. Is it worth having earthquake insurance when your home could be one of the 12,000 or one of the many others that had little to no damage at all? So that's the $1 million question in Northern California. Because if your house doesn't sustain any damage and you're paying for earthquake insurance, you may feel like you're not getting any return on your investment, because anything that we purchase, we're looking for some sort of return. Even with our health insurance premiums, right? You're paying into a system and eventually you may have to use it. Additionally, with car insurance, because accidents happen and you never know what's going to go down in your life. But with earthquake insurance, even if an earthquake happens, you may not sustain any damage in your home, or you may be one of those unlucky few where your home is completely torn off its foundation, or you may have the land crack open underneath your home. It's just anything can happen. So why earthquake insurance? Earthquakes in the United States are not covered under standard homeowners or business insurance policies. Coverage is available either in the form of an endorsement or as a separate policy for homeowners, renters, and small business owners. So this is coming from the InsuranceInformationInstitute.org. That's the source of that quote. So before I go any further, I need to credit a magnificent article from the Insurance Information Institute for providing much of the needed technical details of today's show. You can find the Insurance Information Institute at III.org. That's III.org. So you can check me, look it up for yourself. Or if you've missed any of the program and you're wondering where this information is coming from, send me an email at info@realestateconnectionradio.com. That's INFO at realestateconnectionradio.com with your name and your personal email address. And I can either just send you a link to the website where this information comes from, or I can just add you to my podcast distribution list. You can find the Real Estate Connection on Apple Podcasts. That's the Real Estate Connection on Apple Podcasts. Or you can find the Real Estate Connection on podbean.com. Again, that's podbean.com. And you can go to any one of those sites and just sign up and subscribe. And that way, the shows, as they become uploaded, will come directly to your email inbox. Okay, so let's go on. Unlike flood insurance, earthquake coverage is available from private insurance companies rather than from the government. So coverage for other kinds of damage that may result from earthquakes, such as fire and water damage due to burst gas and water pipes, is provided by standard home and business insurance policies in most states. So again, earthquake coverage is available from private insurance companies rather than from the government. Okay, and coverage for other kinds of damage that may result from earthquakes, such as fire and water damage due to a burst gas line or water pipes is provided by standard home and business insurance policies for most states. Now, we're heading up onto a hard break. When we get back, we'll continue down the road of earthquake insurance, how it works, and whether or not it may be the right decision for your home. And oh, by the way, if you want to work with your radio realtor, give me a call, Stephen Thayard, at 408-472-0817. And with that, we'll see you at the other side of the break.
Now back to the Real Estate Connection with Realtor and Certified Probate and Real Estate Specialist, Stephen Thayard.
Welcome back to the Real Estate Connection with your radio realtor, Stephen Thayard. Thank you for joining me today. Glad that you could make it on Saturday as we discuss all things real estate here in Northern California. If you're new to the program and you've missed any prior content and you'd like to catch up or just see what else is out there, send me an email right now at info@realestateconnectionradio.com. That's info@realestateconnectionradio.com with your name and your email address, and I'd be happy to add you to my podcast distribution list. That way you don't have to miss any past content. Hey, you know, we live in a beautiful state. There are lots of activities to do here. I would say that we are the crown jewel of the United States of America out here in California. Our weather is like no other state in the union. It's not too hot, not too cold. It's not too humid. It never really gets super snowy or super cold or rainy. We've got beautiful coastlines. We export technology to the entire world. We are the home of entertainment, surfing, and wineries. The fruit of the vine is exported all around the world, from Napa County to San Luis Obispo. But with that being said, California also has the surprise disaster that no one ever really knows when it's going to hit, how hard it will occur, and what damage may take place when it happens. And that unknown disaster that could be looming over us at any time as we live in this beautiful state is the earthquake. So in today's show, we are covering earthquake insurance and how it works for residential real estate. And the question is, even if the big one hits, will it damage your home enough where you would actually need earthquake insurance coverage? As was earlier said, when the Loma Prieta earthquake hit, there were millions and millions of dollars worth of damage that occurred all throughout Northern California. And there were thousands of homes that were damaged and or destroyed due to the earthquake. However, there were hundreds of thousands of homes that had minor damage where maybe earthquake insurance was not necessary to have. So the question for you as a homeowner is, what is earthquake insurance? How does it help me? What's the coverage like? Where do I get it? And is it worth me having in my home? So in today's show, we are covering earthquake insurance. We've kind of gone through where it's provided, and that it's sold by private organizations and not provided by state or federal agencies. And we've been going through just the details of what earthquake insurance really is. So unlike flood insurance, earthquake coverage is available from private insurance companies rather than from the government. Now, coverage for other kinds of damage other than the earthquake that may result from earthquakes, such as fire, which is a big issue when you have broken gas lines that occur in and around your home due to earthquakes, which reminds me to remind you, always have a gas shutoff key near your main gas supply at your house just in case of an earthquake so that you can turn off the gas line if necessary. And water damage due to burst pipes is provided by standard home and business insurance policies in most states. Now, cars and other vehicles are covered for earthquake damage by comprehensive insurance, which also provides protection against flood and hurricane damage as well as theft. Homeowners in the West are most likely to have earthquake insurance, with 14% saying they had the coverage, followed by the Midwest, followed by the Midwest at 7%, and the South and Northeast at 6%. So the ratio, basically what this is trying to say, as I tripped over my words, I'm sorry. Basically what this is trying to say is earthquake insurance, 14% of people in the West say they have it. In the Midwest, 7% have it, because, we are not the only place in the country that is susceptible to earthquakes. And for the South and Northeast, it's 6%. So what is the cost of earthquake insurance? Now, the cost of earthquake insurance is calculated on a per $1,000 basis. So let me repeat that again. The cost of earthquake insurance is calculated on a per $1,000 basis. The cost can range from $1 to $10 depending on the risk of earthquakes where your home is located and the type of home being insured. All right, so let me repeat that again. It's a cost per 1,000 basis, and it's $1 to $10 per 1,000 depending on the type of home being insured. So a brick home having more risk of significant damage, while a wood frame home having less risk, means that if you have a home that has a significant amount of brick that tends to come apart when the earth is shaking, then your cost for your earthquake insurance will be at a higher dollar rate per 1,000. Now, if you have a wood frame structure, which has less risk for damage due to earthquake, then you're going to be lower on the spectrum. So the building codes, because of earthquakes are known in Northern California, have changed. We no longer see back in the 1900s, 1910 to maybe 1920, where we had a lot of brick homes. And even like in San Francisco, where there were a lot of brick exterior buildings that collapsed in the great earthquake of 1906, they've moved away from that. However, as we saw in 1989 in the Loma Prieta earthquake, there still were a lot of buildings that had a lot of brick in them. And so they sustained a great deal more damage than construction projects that were adapted to move and flex when the earth shakes rather than come crumbling down. So again, where you would find an issue for your home, because generally speaking in California, most of the houses are built with a wood frame that's bolted to either a slab foundation or a concrete perimeter foundation, you're going to have more give and more bend in your home when the earth moves. The issue for you is if you have an older home that still has a brick chimney, that's where the major damage will probably occur for you if you still have a brick chimney. Now, a lot of neighborhoods, especially older, more mature areas of the Bay Area that have wide streets, big lots, that have tree-lined areas that are absolutely super pretty up and down the peninsula. And I'm thinking of towns of like Los Gatos or the little hamlets of Willow Glen, where you have homes that were built in the mid-century. These are areas where you may still have a lot of brick chimneys in place that could sustain damage, major damage during an earthquake. So for you, it's a decision as to whether or not you would want to get earthquake insurance, or you would spend the extra money to brace or reinforce those chimneys, or maybe to even change them out altogether and replace them with more sustainable smoke evacuation devices or chimneys that you could replace that would be better as far as earthquakes are concerned. So that is something that you definitely would want to look into for your older homes. So why earthquake insurance? Earthquakes in the United States are not covered under standard homeowners And I'm sorry, we went down that road already. I got to turn the page on my notes. I apologize. Come on, Stephen. Stay with me. All right. So we are going through the cost. So if you live in a high-risk state also, like California, and the rate is, say, $3 for every $1,000 worth of coverage, and your home is worth $700,000, your annual premium would be $2,100 annually, or $175 a month. So again, it's based on the value of your home. So again, let me repeat that. If you live in a high-risk state like California, and the rate is, say, $3 for every $1,000 worth of coverage, and your home is worth $700,000, then it would be $3 $700,000 divided by 1. So 3 times 700 would be $2,100 annually, or $175 a month. So with that being said, we're coming up on a hard break. When we get back, we're going to continue down the road of explaining how much earthquake insurance costs and what the deductibles are like and how they're calculated. So you're going to want to stay tuned. So we'll see you when we get back from paying some bills.
Looking to buy, sell, or refinance a home? Maybe you just need to spruce up the one you've got. This is the show that shows you how. It's The Real Estate Connection. Once again, your host, Stephen Thayard.
Welcome back to The Real Estate Connection with your radio realtor, Stephen Thayard. Hey, thank you for joining me on today's show. You know, there is a famous song in the past, Shake, Rattle, and Roll, and that's what we do sometimes in the state of California. You know, we all choose to live here because it's the land of milk and honey, land of opportunity, high tech, farming, beautiful coastlines, fantastic scenery. You can earn a living in multiple different ways in the state, whether you're in construction, you're an engineer, sales, or maybe you're you own a winery, or you're a retailer that sells wine, or just so many other things out here in California. It's just a wonderful place to live. But we do have to deal with an issue that's hidden and unforeseen, and we never know when it's going to pop up. And that issue is the earthquake. That's right, the earthquake. Now, given that we never know when it's going to happen, and we own homes and live in properties because everybody needs a roof over their head, the question is whether or not you, as a homeowner, should have earthquake insurance. And then, you know, what does earthquake insurance cost? And what do the deductibles look like, even if you do have earthquake insurance? And what does it cover? And what doesn't it cover should you choose to invest in this type of insurance for you and your family? Now, and I use the word invest because anytime you make a purchase, you're expecting some sort of return, whether it's food at the grocery store for nourishment for your body, or it's rent for protection and a place to sleep at night, or it's car insurance, knowing that if you get into an automobile accident, you're going to have some sort of protection against the damage that may occur to the vehicle that you may have just paid $35,000 or $40,000 for. The same goes for your family dwelling. Now, all lenders require that you have home insurance on your house, general home insurance that covers water damage and fire. And if you live in a flood zone, your lender will also require a flood insurance. But earthquake insurance is something that is optional. So the more information you have regarding whether or not this is the right direction you should go for your family, the better you can make decisions as to whether or not you should choose to invest in it. Now, if you've just joined us for today's show and you've wondered what content you have missed, you can send me an email right now at info@realestateconnectionradio.com. That's info@realestateconnectionradio.com with your name and email address, and I'd be happy to add you to my podcast distribution list so that you do not have to miss any future or past content. And if you are thinking about buying residential real estate or selling residential real estate in the near future, and you want to work with your radio realtor, Stephen Thayard, give me a phone call right now at 408-472-0817. Again, 408-472-0817. Thank you to the listener who called me recently. We're going to get his condo up for sale on the market. We're doing some improvements to make it more attractive to buyers, and I appreciate his confidence in me and getting the job done. So again, give me a phone call right now, 408-472-0817. So we've discussed the cost of earthquake insurance in that the more risk or the higher risk state that you live in, the more cost there is to the insurance should you choose to purchase it. So, but what about the deductible? How are deductibles calculated? Earthquake insurance carries a deductible, generally in the form of a percentage rather than a dollar amount. Now, deductibles can range anywhere from 2% to 20% of the replacement value of the structure. This means that if it costs $100,000 to rebuild a home and there was a 2% deductible, the consumer would be responsible for the first $2,000. So if you're in California and your home is worth $1 million, then you could extrapolate and multiply that $2,000 times 10, and then that would be a $20,000 deductible. So then you have to ask yourself, would this be worth it for you as a homeowner if you do not incur $20,000 worth of damage to your house should you find yourself in the middle of an earthquake and something has occurred due to the shaking? So, in California, if at a 10% deductible for a house valued at $700,000, the deductible would be $70,000. So, okay, I miscalculated. So, sorry about that. I had it in my notes and I should have just kept reading. Anyway, so in California, if at a 10% deductible and the home is valued at $700,000, then the deductible would be $70,000. So you would be required to pay the first $70,000 and then insurance would cover the remaining damage. Okay, so again, going back to what I said and repeating myself over again, got to give myself a break. There's a lot of information here. You have to decide whether or not it's worth it, because that's a big deductible. Now, if the house is completely destroyed, that $70,000 is a drop in the bucket. However, if it's just maybe the garage door comes off its hinges, or you've got a crack in the pool and the water's draining out and you need to have it resurfaced due to damage from an earthquake, is it going to cost you $70,000 to get that done? Probably not. So it's definitely a cost-benefit analysis and a risk basis reward analysis as to whether or not it makes sense for a homeowner to buy earthquake insurance. All right, so California law requires homeowners insurance companies to offer earthquake coverage to their homeowners insurance policy holders. Now, homeowners can decide to purchase it, purchase a policy from another insurer, or decline it altogether. So unlike other insurance policies, like with a lender, where if you're in a flood zone and it's required to be purchased because the lender is the one who really owns the home technically, even though you have the right to use it and pay all the bills and take care of it. The lenders will try to protect the asset until all of the loan is completely paid off. So with that being said, you're going to be required, if you're in certain flood zones, to have flood insurance, or you definitely will be required to have general home insurance on the property. But for earthquake insurance, it's optional. And so that's a risk that I guess the lender's taking, as well as you, as far as whether or not you should purchase an earthquake coverage policy. All right. So if you're just joining the show and you've wondered what you've missed, send me an email right now at info@realestateconnectionradio.com. That's INFO at realestateconnectionradio.com with your name and your email address, and I'd be happy to add you to my podcast distribution list or send you a link to today's show. All right. And if you're thinking about buying or selling a home in the near future, and you'd like to work with your radio realtor, Stephen Thayard, give me a phone call today, right now, at 408-472-0817. Again, 408-472-0817. Interest rates are still historically low. The prize in California real estate in the market is owning a home in California, because then you start to play the equity game and you have a source of wealth production for your family. And if you're looking to cash out on all of that hard-earned equity to buy that dream home, now's the time why buyers are still hot and heavy in the market. Again, Stephen Thayard, your radio realtor, at 408-472-0817. And with that, we'll see you on the other side of the break.
Now back to the Real Estate Connection with Realtor and Certified Probate and Real Estate Specialist, Stephen Thayard.
Welcome back to the Real Estate Connection with your radio realtor, Stephen Thayard. Hey, I just want to thank you all for joining me on Saturdays. Without you, there would not be a show. And so I am very grateful. I know your time is valuable, and I really do appreciate you hanging out with me today. So with that being said, we are talking about earthquake insurance. And it's one of those things where you live in California and it doesn't happen very often. And we get busy with life, running around, paying our bills, working, celebrating birthdays, and having social events, and dealing with holidays and all that kind of good stuff, and just everyday issues that pop up. And it tends to fade back into the background, and we forget all about it. So it's not a bad idea to look into earthquake insurance, maybe on an annual basis, to kind of recheck and see where you are at. Maybe last year it didn't make any sense for you, or even 5 years ago it didn't make any sense for you. But maybe you're in a position right now in life, whether it has to do with where you live or the type of property that you own, where you're thinking that maybe I should look into this. It's something that I should at least check out and then make an informed decision as to whether or not I should get earthquake insurance for the home that me and my family live in. So today's show is dedicated to just that, earthquake insurance. What is it? What does it cover? What do the premiums look like? What does the deductible look like? And whether or not this information helps you to make a decision about purchasing it. So we're going to talk about right now the California Earthquake Authority. In January 1994, when the Northridge earthquake, a magnitude 6.8 quake, struck Southern California, causing an estimated $25.6 billion with a B dollars in 2017 in insured losses. The insurance industry ended up paying out more in claims for this quake than it had collected in earthquake premiums over the preceding 30 years. Now, while no insurer became insolvent, meaning that they ran out of money, some came very close. So to recover their financial strength and to be better prepared for the next earthquake, most insurers began to limit their exposure to earthquakes by writing fewer new homeowners insurance policies. In addition, most insurers filed for both rate increases and increases in deductibles from the 10% that was current then to 15% or higher. So in our prior example, 10% of $700,000 was 70 grand. If you could imagine that going up to 15%, this triggered a crisis that by mid-1996 threatened the vitality of the state's housing market, installed the state's recovery from recession. So in 1996, the California legislature established the California Earthquake Authority, or the CEA, as a publicly managed, largely privately funded entity. The CEA is now the largest provider of earthquake insurance in the United States, with more than 1 million policies in force in California at the end of 2017. So why is this important? This is important because California has backstopped the earthquake insurance industry with this legislation. So the standard CEA policy includes a deductible that is 15% of the home's replacement cost. So again, if it costs you $700,000 to replace your home, then your deductible is going to be 15% of that $700,000. The basic policy covers only the house. Other structures such as garages, pools, etc. are not covered. Personal possessions are covered up to $5,000 and loss of use expenses. The additional cost of living elsewhere while home repairs are made are covered up to $1,500. Now, recognizing that some people want more comprehensive coverage, the CEA also offers a 10% deductible insurance for other structures, personal items coverage up to $100,000, and $15,000 in loss of use coverage. Premiums vary widely among the 19 rating territories based on the type of house, its age, the nature of the soil, and proximity to known fault lines. The CEA has reserves of about $9 billion with a B dollars. Okay, so this is important to know. Because earthquakes happen suddenly and the losses are immediate and overnight, it could really hit the insurance companies hard and they may run out of money. So now with the California legislature establishing the California Earthquake Authority, it backstops the industry, which makes earthquake insurance still available so that people can buy it and have peace of mind if they're buying in areas with a high likelihood of a quake or a high likelihood of high damage because of where their house sits on a fault zone. Now, if you're off a fault zone and a heavy earthquake hits, you may sustain some damage, but you may not get damage that causes your house to be red tagged where you can't even occupy it anymore. So that's something that's very important to people who live on or very close to major fault lines in the state of California. So it's good to know that the state did something positive as far as insurance is concerned for earthquake insurance. So if you're just joining me on today's show and you're wondering, why is this guy talking about the California Earthquake Authority? Well, we've been covering earthquake insurance, where it comes from, where you buy it, how much does it cost? What are the deductibles? What's the rate for purchasing the insurance? We now know that it's 15% from the California Earthquake Authority as far as the percentage. So a deductible on your earthquake coverage is based on a percentage of the cost to replace your home. So if your cost to replace your home is $1 million at a rate of 15%, you can do the calculation yourself and you know that's a pretty big number. But again, like I said, if you're just joining me and you want to catch up on what you missed in regards to our discussion of earthquake insurance, you can send me an email right now at info@realestateconnectionradio.com. That's INFO at realestateconnectionradio.com with your name and your email address, and I'd be happy to send you a link to the show or just sign you up for my podcast distribution list. If you're trying to find the Real Estate Connection on the internet, you can find me on Apple Podcasts. Again, the Real Estate Connection, search under the business section, the Real Estate Connection on Apple Podcasts, or you can also find me on the website podbean.com. Again, that's podbean.com. That's podbean.com, and just search the Real Estate Connection, and you can just subscribe to the channel there, and that way you'll get updates every time there's a new episode that pops up. They're labeled, and so you'll know exactly what information is contained in those shows. And oh, by the way, if you want to work with your radio realtor, Stephen Thayard, whether you're looking to purchase a home in the near future and want to take advantage of these historically low interest rates, my goodness, we've never seen rates this low in the United States of America, still hovering around 3%. 30-year fixed on a conventional loan. Don't quote me on that. Check with your lender. I said around. It's an approximate, not an exact number, but still historically low. Or if you've built up equity and you're ready to cash it in for the dream home, the house of your dreams, or you're looking to downsize or move closer to friends and family, give me a phone call as well. Buyers are out in the market. They're still pushing hard through the end of the year, and houses are selling with multiple offers. Now may be the time to take advantage of it, because your equity doesn't mean anything until you can convert it to cash. And right now, the conversion rate is really high. And it's not as difficult as it's been in the past. There's nothing worse than trying to convert your equity into cash in a down real estate market or a flat market. So maybe now's the time to do that. Give me a phone call right now at 408-472-0817. Again, 408-472-0817, and I'd be happy to speak with you about your specific situation. I want to thank my radio listener who I'm helping helping sell their condo up in San Bruno. I appreciate him reaching out to talk to me. Now we're running up onto a hard break. When we get back, we're going to look into what are the pros and cons of earthquake insurance, and what does it cover? Right? And then what kinds of damage do earthquakes cause on a home? So we're going to cruise through that in our final segment. You're not going to want to miss it. So stay tuned. We'll be back in a minute. Thank you for joining me on another episode of The Real Estate Connection with your radio realtor. We'll see you on the other end of the break.
Looking to buy, sell, or refinance a home? Maybe you just need to spruce up the one you've got. This is the show that shows you how. It's The Real Estate Connection. Once again, your host, Stephen Thayard.
Welcome back to The Real Estate Connection with your radio realtor, Stephen Thayard. Hey, if you're wondering what we've been discussing today, we're in our final segment and we're talking about earthquake insurance. We live in the state of California. It's absolutely gorgeous and beautiful in the state, but looming in the background is the threat of earthquake. Now, earthquakes can come in and we could have major damage or not very much damage at all. And so the question is earthquake insurance right for you and your family? In this segment, we're going to go through what are the pros and cons of earthquake insurance. Now, credit goes to Mila Arrojo, the Balance.com article dated July 1st, 2019. Now, the pros of earthquake insurance. If your home is damaged by an earthquake, you will be covered for the repairs or reconstruction rather than losing everything or having to borrow more money to make your home livable. So in low-risk areas, the cost of earthquake insurance is lower, and we've covered that. We've talked about it. In high-risk areas, the cost of insurance is much higher. So it is always worth getting a quote so you can make an informed decision. If you find out earthquake insurance is only $20 a month, maybe it's worth paying for just for the peace of mind. You may also consider offsetting the cost by taking a higher deductible to save money on your insurance costs. So there you go. If your home is uninhabitable due to an earthquake, you may get additional living expenses to live somewhere else while the insurance company rebuilds your home. This way, if you are still paying your mortgage for your destroyed home, at least someone else is paying for a place for you to live. So that's a very good point. Imagine having to pay your mortgage for a house that no longer exists and will not be rebuilt, plus your accommodations while you get yourself back in shape. Insurance is always good to have when a major disaster strikes. Now, again, take this comment with a grain of salt. If you are not living close to a fault line and a major quake happens, you may not get enough damage so that the earthquake insurance actually comes into play or cuts in because the deductible is so large. So you have to do the math. Look at where you are on the earth as it relates to your fault line in your area. See how close you are to it. Do some research to see where traditionally earthquake damage has occurred at its heaviest due to active fault zones in your area, and see whether or not your house is in a place where you think, based on past history, damage is high. And then make your decisions, all right? That's the way to go. What kinds of damage do earthquakes cause? Partial to total destruction of buildings, building collapse, structural damage to buildings that create dangerous circumstances and require repair, damage to other property and landscaping. Sometimes there can be fires, gas leaks, explosions due to gas leaks, landslides, avalanches, especially if you live up in the mountains, flash floods if dams break. And if you're on the coast, there's always the threat of a tsunami. Now, I know that sounds odd, but if you remember back a few years ago when Japan had a major earthquake, there was a tsunami that came through and caused major damage to a nuclear power plant where there was nuclear material leaking out, and they were having a problem containing it. So if you do live along the coast of California and an earthquake happens, there absolutely is the risk of a tsunami. So you also need to be prepared if you're living in those types of areas as well. So I think that's pretty much it for today's show on earthquakes. I hope you've enjoyed it. If you have any questions, let me know. If you've missed anything and you want to catch up, send me an email right now at info@realestateconnectionradio.com with your name and email address, and I'll send you a link to the show or add you to the podcast distribution list. And oh, by the way, if you want to work with your radio realtor, whether you're looking to buy or sell in the near future, give me a call at 408-472-0817, and I'd be happy to help you with your purchase or the sale of your home. And that's it for the Real Estate Connection this week with your radio realtor, Stephen Thayard. God bless you. God bless the United States of America. And build your house on the rock, the solid rock, the rock of God, so that when those floods come, you will stay stable, including your house, even in an earthquake, because God is always the answer. God bless you again. God bless the United States of America. And we'll see you next week on another episode of the Real Estate Connection with your host, your radio realtor, Stephen Thayard. Take care. Bye-bye.
This has been The Real Estate Connection with realtor and certified probate and real estate specialist, Stephen Thayard. Licensed Cal BRE number 0170019. For more information on this program, visit realestateconnectionradio.com. To contact Stephen directly, call 408-472-0817 or email info@realestateconnectionradio.com. And be sure to tune in next week at this time for The Real Estate Connection.